Right, so we're going to look at this adjustment now, which is drawings, and it only ever appears in a sole trader final account because it's only a sole trader that can have, we'll see the drawings. It won't happen in company accounts. In company accounts, you'll pay dividends to the shareholders. So what is drawings? Drawings is when an owner takes something of value from the business, right? So imagine a drawing or a sole trader took cash from the business. So how would that look? So we would credit the cash or bank account because that is leaving the business, and we will debit drawings. So you'll see here that we debit drawings and credit capital. So DDCC, so debit drawings, credit capital. And drawings is just the opposite of capital. Capital is a liability account, and then drawings is just doing the opposite of putting something in, taking something out. So we debit the drawings. So we always debit drawings. So that's what happens when it's cash. Now, a sole trader could live in a part of the building, okay, which we will see a lot here in sole trader final accounts, or, they could take money from the business for, mortgage payments or fuel or whatever it might be. So it could be lots of different things. So if it's an expense, we will credit the expense account, all right, and then we will debit the drawings. So we always debit drawings, so we credit whatever else it is that the sole trader is taking out of the business. Okay, so we're going to take a look now at the 2021 question 1A, so the sole trader account, obviously. So it said in part 8, provision should be made for the following. Number 1, investment income due and mortgage interest due. So note, 20% of mortgage interest for the year refers to the private section of the business. Okay, so in this question, all right, we have already had a bit of an issue with the suspense account. Now, so if you have looked at the suspense adjustments, you'll remember this. But there was a mistake here. Okay, so the mortgage interest paid actually was 500. So we fixed that there in the suspense account then as 36 minus 5. But anyway, we need to just know that in order to be able to do the mortgage interest due. So it was actually 2875 that was paid. Okay, so the rest of the year then was 2875 and 10500. So it was 13375 altogether for the whole year. But we did that in step 3. So you already have it looking like this in your accounts, right? But the mortgage interest due is going to be 13375 minus 2875, so 10500. Then you're going to split up the mortgage interest into 20% in the drawings here because the sole trader lives in 20 of it, and then 80% for the business. So in the business, we're going to have multiplied by 80%, we'll minus 10,700, that should be somewhere here, and then we will add the 20%, which is 2675 there, and that's basically the adjustment done. In 2020, it was exactly the same. Note 8, provide for both investment income due and mortgage interest due. And note 20% of mortgage interest for the year is to be attributed to the private section of the building. Okay, so again, we had an issue with the suspense account. All right, so the mortgage interest that it was recorded was actually wrong, and it was actually 4,800 that was paid, not 8,400. So to calculate the rest of the mortgage interest for the year, you already have this done in step 3 if you follow my steps 1 to 5. But the mortgage interest for the year should be €22,800. So that's already been there, okay? That's already there. Here you have your 22,800 minus 4,800 is 18,000, all right? And then we have to split it up. 80% of that needs to go into the business and 20% needs to go into the finance buy. So if you multiply it by 80%, you get 18,240, which can go here in the final column. And then you add the 20%, 4,650 there. So that's that. In 2017, we've got drawings here. Goods taken by Mullen for own use during the year were not recorded. These goods had a retail value of 4,800, which is cost plus 20%. Okay, so this is a nice simple one. It's basically goods taken during the year. So I've said before, I'll say it again, when we see goods or stock and the words during the year, you're going to be looking at purchases. So Mullen took goods for our own use during the year, and we didn't record it, so we need to record it now. So these goods had a retail value of 4,800, which is cost plus 20. So we need to find out what cost is, because we're going to record it at cost. So 4,800 divided by 120 multiplied by 100 is 4,000. So from your purchases, we're going to credit the purchase account, so we're taking away from purchases, minus 4,000, and then the drawings, we're going to add 4,000. So you just take the trial balance figure and add 4,000 there. And that's as simple as that. Minus 4,000 plus 4,000, and that's one entire adjustment done. You just need to know goods during the year is purchases, and then for own use, drawings. So 2014, we've got two adjustments here. So it says note 5, provision to be made for mortgage interest due. 25% of the mortgage interest refers to the private dwelling. And then number 8, goods withdrawn by the owner for private use during the year with a retail value of €3,000, which is cost plus 25%, were omitted from the books. Okay, so again, there was a mistake earlier on with the mortgage interest paid that we saw in note 3 in the suspense accounts. So this 1,500 is actually incorrect. So it should have been 2,100. Okay, so you'll see all this in the suspense adjustment, but I went through this in that video. So to get 2,100, we add €600 here, and then the item incorporating suspense, we will minus €600. So with that then, what we're going to do is we are going to say 2,100 has been paid. Earlier on in step 3, we would have worked out that the entire mortgage interest was 11,100 when you add the two amounts for the year. When you look at the fixed mortgage here and you incorporate the increase then for the last 9 months. So 11,100. So you already had that done from step 3 there, but mortgage interest due, you've got 9,000 mortgage interest due, because this is the actual mortgage interest that was actually paid, so you fixed that. Now, then you have to put 75% of it into the business, because it says that 25% relates to the private dwelling. So 75% here, 8,325, and 25% here, add 2,275. So that's the first adjustment for drawings done. The second adjustment for drawings, goods withdrawn by the owner for private use during the year with a retail value of 3,000, which is cost plus 25%, were omitted from the books. Okay, so what we do is purchases figure will minus the 2,400, all right, from there, because that is the cost of the books. So the retail value is 3,000, which is 125%. Then you multiply it by 100 and you get the 2,400 that we take away from purchases, because it's goods and during the year, that's purchases. And then we'll add the 2,400 to drawings, and that's that adjustment done. 2010, we have another one about mortgage interest. So note 6, provision to be made for mortgage interest due. 10% of the mortgage interest for the year refers to the private section of the business. So we have our mortgage there, we have mortgage interest paid for the first 3 months here, 1,400. So we need to look and see, did anything happen to the suspense earlier? It did. So the mortgage interest is wrong here. So when we looked at the suspense adjustment, we figured out that that should have been 1,400. So we simply add 100 to that, and then we minus 100 from the item incorporating suspense then to make the two sides equal again. So look back on the suspense video if you find that confusing. Okay, so 1,400 was the first 1,500 was the first 3 months, and then when you did the last 9 months at 180 by 6%, you got 8,100. So the mortgage altogether there is 9,600, which you did in step 3 if you follow the steps that we did. Now, mortgage interest due is the amount for the year, the 9,600, minus what they actually did pay, which is 1,500. So that means that the mortgage interest due, €8,100 there in the balance sheet. So that is that. And then we multiply it by 90% and put that into the business. So 8640 can go in the final column there. And then we add 960 to the drawings. In 2008, we just have goods that were withdrawn. So adjustment 8, goods withdrawn by the owner for private use during the year with a retail value of €2,000, which is cost plus 25%, were omitted from the books. Okay, so goods during the year, that means purchases, and they were withdrawn from the owner for private use, that is purchases. So we just have to find what is the cost of these. So they have a retail value of 2,000, which is cost plus 25%. So purchases minus 1,600, so it's 2,000 divided by 125 multiplied by 100 is 1,600. And then we have drawings. That 36,200 came from the trial balance, and then we just add the 1,600 there, and that's that done. In 2006 and 2003, there were no drawings adjustments, which is quite unusual for sole traders. But basically, that's your drawings done. So sole traders, they like to just take out goods from the business, and they like to then live in a portion of the building that they work from. So that is drawings. So if you're doing a sole trader final account, definitely prepare to see a drawings adjustment.